Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The start of the original big move was generated by the large, bright red April to late October 2024 ascending wedge pattern. This pattern had been biding its time since late spring last year. The initial leg higher left one jarring feature which I spoke about 12 weeks ago, that the month of November was a monthly key reversal up, a highly unusual pattern to see at the then top of the market. Prices then travelled in between the late November 2024 high at 335.45 to the May 2011 high at 309.10 till in mid-January this year prices took a fresh flight higher, pushing and closing over the early December 2024 high at 348.35 and into new territory, such that by early February the market had broken higher out of the December 2024 dark blue bullish shift picture you can see on my daily chart and over the latest 50% projected Fibonacci line at 402.05. There are two features I'd like to highlight on this daily chart. The first is the obvious dark blue highlighted December 24 to based bullish shift pitchfork. This pattern had been breached and arguably broken in February on the top side, but has now seemingly been repaired. Prices are right now in between the upper time overhead, currently at 401.5, and the middle time below, currently 374.90. They're actually peaking today at the lesser Fibonacci line at 389.35. This middle time, as for most of last week, acted as an attractor, especially on a closing basis. So what now? Well, for this I'm indebted to Ray Bradbury for asking about New York coffee 2 weeks ago, and I went to my longer term charts, the monthly charts, where we can see some possible insights there, and I'll share it now with you. You see on the monthly charts, that's the longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed these charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom. A bright red neckline on my chart currently at 273.80. The break higher over this neckline has already reached its primary target, but it has still opened the secondary much harder to reach target X, up in the 433.35 area. What is interesting about this is that nearby to that is the next 100% projected Fibonacci line at 433.75, which is quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? I could not say, not yet. Though we did have what could be seen as a possible shooting star pattern last week, a pattern usually seen as bearish. What I can say is that if there was ever an area where the market could hesitate on the top side, then the 433.35 to 433.75 area would be a reasonable choice. I'd look up at that area and on any approach to that area very closely. London coffee. 13 weeks ago I drew a new large pattern that encompasses all the recent significant elements. It is not ideal, as it's quite large, but it does show promise. It is the bright red, shallow, large bull channel, currently 46.20 to 59.34. This latest attempt higher was started from the monthly key reversal up right at the top of the market made in November last year. All this led to the creation of another pattern in early November to early December last year, bullish Andrews pitchfork, that has since been finessed into a shallow bullish shift pitchfork for the same move, highlighted in dark blue on my daily chart. Right now prices are just above the lower time, currently 53.02, and the slowly rising mauve medium moving average, currently 53.23. The shallower bullish shift pitchfork has shown the bullish angle of attack of this market, and the support seen from the lower time back in mid-January and arguably during last week does add some legitimacy to this pattern. The only issue is that the dark blue middle time crosses over the bright red upper bull channel line next week, and that is something to watch for any volatility and to bear in mind. There's also two other patterns to watch, both of which I pointed out 2 weeks ago. They are a late January to late February small ascending triangle, highlighted in bright green on my daily chart, that last week after a first failed attempt, the market broke down through this pattern here and thereby created the second pattern, a double top for the same period, an Adam and Eve double top. I added a comment 2 weeks ago about these patterns, and I quote, "Watch this space very carefully. I suspect this market will make a very important statement soon." End of quote. Well, both the primary and secondary targets for the ascending triangle have been reached. And as for the double top pattern, the primary target of 52.92 was reached last week, leaving only the secondary harder to reach target X at 51.28 still open. This secondary target is just above the small congestion zone seen in late December 2024 to January 2025 that formed a small double bottom, as well as just above the short medium moving average, currently at 50.55. However, to achieve that, prices need to first break down through the previously mentioned mauve medium moving average and the dark blue lower time, and I've yet to see that happen.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.